we're never going to return back to normal, unfortunately. And so what you have to do is you do the best you can. And you try to set your family up with the right kind of investments, which we believe are precious metals. And you set your family up with the situation for your household that can withstand volatility in the climate and in the market. And if you don't have that, maybe your friends or family do. It's going to be important that family and friends stick together in the future.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs. Welcome back to Liberty and Finance. We're delighted to have this returning guest. Steve St. Angelo is the founder of the SRS Rocco Report. He joins us again this Thursday, September 16th, 2021 on Liberty and Finance. Steve, thanks for coming back on.
Yeah, Dunnigan, it's great to be here. Yes, we had a bit of a sell-off in the metals, but I tell you, the metals, even though we're going to have this kind of price action, going forward, the situation for the fundamentals of the precious metals are just going to get better. And I know that's repeating myself, but there's some new information that I've been looking at that just suggests the world is in serious trouble, and we're starting to get glimpses of that.
You mentioned there's a sell-off in the metals, and that's exactly the opposite of what I think the truth is. And it's similar to where I have to sometimes interject with certain guests when they use the word money to get them to use the word currency instead. There was actually a sell-off overnight in the futures market, not metals, but futures paper contracts that started a cascade of contract selling that influenced the spot price of metals. But the actual metals supply-demand situation today has been completely one-sided buying. So it's interesting that when the price drops, we all assume, because of assuming things are according to nature and the laws of gravity and so on, we assume that must mean that there was a sell-off. But actually today was a blisteringly hot market for physical buying, following a cascade of paper derivative selling. So just to make that distinction, and I'm sure you make that distinction a lot when you're talking about energy prices. In fact, you just wrote an article called It Begins, and you're talking about some of the things that you've been predicting for a long time about the energy cliff and so on. Can you bring us up to date on your latest research in that area?
Yes, Dunnigan, the switch, or the transition of the West, mostly the Western governments to green energy, which may be good for silver and other metals because it's going to consume more. That's one thing. But the transition to green energy is actually a very bad thing. And we're starting, what I've been talking about, the problems that we're going to see are starting to take place, happened in Japan earlier this year after the winter, and then it's happening right now in Europe. The natural gas prices hit $75, actually 75 euros yesterday. They've sold off a little bit, but what is the reason is the intermittency of wind and solar. The transition of the Western governments to this green energy, which is wind and solar, and now we see EVs and battery storage, that was always going to be a disaster. And it's one thing to add a little bit of wind and solar, but when you add a lot like they have in Europe, to offset that, you need natural gas because they've cut coal and they're cutting nuclear. Well, they had a pretty cold winter in Europe, and then they've had a pretty warm summer, and both Russia and Europe's natural gas storage really fell. Well, Russia has cut its supplies to Europe, not for geopolitical reasons, but because they're trying to stock up on their own natural gas storage for the winter. And they fell down to 19% by April this year. That's how low 19% their storage was. So it has caused the price of natural gas in Europe to go up to 75 euros yesterday. And so this is what's going to happen in the United States, because the only way you can offset the intermittent problems with green energy, wind and solar, is with natural gas. And that's fine if you can continue to increase natural gas. But now that there's problems with natural gas supply and too much demand, it's going to get much worse. And so this is something I see that people need to they need to understand these dynamics, because it's going to hit the United States too.
We've had transient times in the past when there were especially cold winters and there were natural gas shortages and the price doubled or more. We did an interview with a homesteader who had bought a new home that had a 500-gallon propane tank, and he had to add another 500-gallon propane tank and fill them up both twice just to make it through the winter. And instead of being, hundreds of dollars to fill it up, it was over $1,000 to fill up these tanks each. And finally, by the next spring, he said, that's enough. Put in a wood-burning stove, made association with the local highway patrol that when there were trees down blocking the roads or wherever, he'd get called and he'd zip out there and get free firewood. And so we had an interview we called Heating Your Home for $0, heating your home for free. But that's not necessarily going to work for everybody. And it's maybe related to this other question from Kawhi Martial Arts, who said, Steve, what happened to past empires after they hit their energy cliffs with wood and coal? Is there a way to mitigate the damage from a very low EROI source?
Well, that's a great question. And the answer is, he says, is there a way to mitigate the damage from a very low EROI? And that was wood fuel EROI. Well, the answer was collapse. The late Bronze Age and the Roman Empire, the answer to that question is they collapsed. Because this is what happens, Dunnigan. We brought on all this wonderful oil, natural gas, and coal, and those are the three major sources. Well, instead of maybe limiting our demand just keeps going up right along with production levels. We're at such a high level now. To maintain that high level of production, to keep that demand, that everybody's got all this natural gas demand now, and you see fluctuations, a little bit of fluctuations, you see a lot of volatility. Unfortunately, there is no way to mitigate it. The way to mitigate it is the way that gentleman who went to wood, but not many people can do that, and that's the problem. And so I don't have a positive answer for everybody, but we just continued to add more production of energy, and we just added more demand. And we're at this just-in-time level now, and unfortunately, I think we're going to have serious troubles in the next 5-10 years.
That was the next question, actually. Yak Yak says, Steve, given the numbers, when would you expect the energy cliff to impact daily life enough for the general population to be aware of it?
Well, I always have to keep a footnote. My timing can be off. I'm not a guru. I'm not a fortune teller. But if I look at the numbers and what's happening, like the Bakken, its production in July fell 5% in 1 month. 5% in 1 month. It's down now 35% since its peak back in 2019. And so we're starting to see a lot of problems now with shale, and shale was the number one energy source in the world. So I think in looking at the data and looking at the massive debt now that we're adding, Dunnigan, it looks like we're going to start to see trouble with energy by 2025, and then we're going to start going over the energy cliff by 2025 to 2030, and it gets really bad by 2035. So that's kind of what my sense is of the market.
Now, you just, in the setup for that description, you mentioned debt. Help us understand the connection. What does debt have to do with the energy cliff?
Well, it seems as if as the energy return on investment has been falling for oil, it's being made up by debt, because what that means is the world, like the Americans, cannot afford the same quality of life. So what we're doing is we're adding debt to kind of offset it. and it also inflates the asset values too. So it's interesting. The U.S. debt really started going up exponentially in about 2002, 2005. Well, that's when U.S. oil production, energy return on investment, fell below this 12 to 1 minimum that we need. And with shale oil at 5 to 1, it's so much below that minimum level, the debt that the United States is adding, not only for its own domestic, but its importing of oil. This is the reason why we're seeing all this debt. So at some point in time, when oil production starts to decline, it's going to actually pop that debt bubble, and then it's going to pop the entire asset bubble. And that's why it's important to be in the precious metals.
You recently just talked to us about the concentration and overpopulation within highly concentrated, complex civilizations, how big empires throughout history have built these huge cities, and how the supply chains got too long, too far from their fuel source, et cetera, and how the complexity of that combined with those long supply chains spelled the end of those empires. Right now, you were talking about the energy cliff coming and some of our lifestyle that will be unsustainable. Are there solutions such as people moving away from extreme climatic regions to more survivable climatic regions, or from high density areas to lower density areas?
Well, that's, if you look at the three major ancient civilizations, which are the late Bronze Age, the Roman Empire, and the Mayan, they all collapsed between 50 and 100 years, about 10% of their time.
Meaning, hold on, I want to make sure we understand that these empires lasted a long, long time prior to that. They lasted for centuries, but the collapse happened precipitously in just a few decades, you're saying?
Yeah, between 8 to 10% of the time. So there's this idea that there's a peak and then there's a slow decline. No. It's the Seneca cliff. It goes up, and then the last part of the collapse is 8%, 10%. So if you look at the modern industrial world, that started at about 1800, and it's now 2020. The collapse, it's been about 250 years. Let's say if you add the collapse period. So I think the total collapse would take place over 20 to 25 years. And so, and it's not going to happen overnight, but as time goes on, it's going to be more difficult to make those decisions. And so, yes, I think it's important for people to move to places that are away from big cities and to move to climates that are not too dry and not too wet. And that's kind of the rule of thumb. And if you're going to be in more of a wet climate, you should be higher elevation. You should not be in the lower elevations. And we're starting to see the problems with living in lower elevations with this tremendous rainfall and flooding.
So part of survivability is not just being able to survive the temperatures, it's also elevation and drainage and so on for flooding. Because, it's interesting. In my first professional career as an engineer, I was working with meteorologists doing large-scale National Weather Service type computer systems, and was told that as much as people are afraid of things like tornadoes and other dramatic weather events, that it's actually flooding that kills much more people worldwide yearly than things like that.
Yeah, and the reason why is there's not a lot of people living up in mountainous areas where the fires are taking place now. Mostly it's in the West, which is arid. And so the problem is in the East, where there's more of the population, it tends to be in lower areas. And actually, this is true throughout the rest of the world. And China, it's a very big problem because they went from being an agricultural country to a high-tech country in a matter of 3 or 4 decades. And they have a lot of people living in very low areas, hundreds of millions of people living in very low areas. So the flooding is going to be very bad for China. But that's true.
Along the lines of strategic relocation, you recently have relocated. Are there key factors that you think people would do well to prioritize when looking for their, I guess, the most survivable location, both in their lifetime and for their offspring?
Well, while flooding is a major concern, drought is even worse, right? Because if you're not in a very low flood area, if you get more water, the water will run off, unless you're close to a stream or a river. But drought conditions, I believe, are going to get worse in the West. And it's very similar to what happened in the late Bronze Age. And there's been new scientific information coming out of some Russian physicists showing that the deforestation of trees and the burning down of trees, it changes the transpiration of water up in that area. So not only is the area getting warmer because there's less forest. Remember, you go to a desert, it's very hot during the day and it's extremely cold at night, but you go to a forest, a very big forest, and it moderates the temperature. So when the forests are being deforestation, or they're getting impacted by fire, because when you destroy a tree, it no longer acts as a sponge for water or releases water, then it's like a negative feedback loop or a positive feedback loop. It just gets worse. So unfortunately, I think the western part of the U.S., not everywhere, I think it's just going to get drier. And the eastern part is going to get even wetter. And so, but it's important to also understand, and we can finish up on this topic, that it's better to be in a climate that has more rainfall than is arid. Because, I mean, if you look at what's happening in the reservoirs in California, and they're suggesting it's going to be 2 more years of this at least. So, I mean, this isn't something that's happened overnight. This has been a 2-decade kind of a trend, and I think it's going to get worse.
I've even heard that there's different cycles you can superimpose, and some people say we're experiencing evidence of a 500-year drought cycle currently playing out in the western U.S. So it'll be interesting and very concerning for a lot of people because of the concentrations of population in whether it's Arizona, Nevada, California. A lot of areas there are extremely concentrated compared to what you would normally see indigenous peoples, living in any particular arid region. Another thing you just mentioned, I guess you've touched on it with energy. You've touched on it briefly. You brushed up against it with finances. Now you're touching on it with moisture in the atmosphere and in the climate. Is this idea of moderate versus volatile and extremes. We've been told by multiple guests that in a fractured and broken, just-in-time, overly complex supply chain, as what we saw get impacted by global lockdowns and that sort of thing in the last year and a half, that what we're seeing is, and we're going to see more of going forward, are these lurches, these lockups and lurches and booms and busts and this spiky volatility. Do you see that happening in these different realms, both I guess for similar but maybe parallel reasons, and then in some way actually interacting with each other, economic volatility, climatic volatility, and so on?
Yes, well, I'm doing a presentation for a financial group, and the thing is, what's important to know is that world GDP is based upon world oil consumption. They go hand in hand. And oil allows natural gas and coal to be extracted at elevated levels. So when you get in trouble with oil, you're going to get in trouble with natural gas and coal, because coal is mined by diesel-powered equipment. It's transported by truck, barge, ship, and train. They don't have long extension cords. Those are all powered by diesel, and that's a petroleum product. So, and then it takes 1,500 truckloads just to provide one shale gas well. 1,500 truckloads of trucks moving just to make one shale gas well. Well, those are all powered by diesel. So when you understand these dynamics, as the oil production declines, it's going to impact GDP. And on top of it, Dunnigan, as you mentioned, to throw in a couple of more factors, you've got climate volatility. And I mean, because look how much oil has been shut down in the Gulf of Mexico due to the two storms. And then the massive flooding in Port Fourchon took a major hit. And I don't know if any of your followers have watched the movie on Deepwater Horizon, but the actor flies out of Port Fourchon. That's where they shot that. That's Port Fourchon. The helicopters take out all the people to the Gulf of Mexico. That's how they fly in and out. So this is a dynamic that's just going to mess with so that we're never going to return back to normal, unfortunately. And so what you have to do is you do the best you can. And you try to set your family up with the right kind of investments, which we believe are precious metals. And you set your family up with the situation for your household that can withstand volatility in the climate and in the market. And if you don't have that, maybe your friends or family do. It's going to be important that family and friends stick together in the future.
In the face of these realities that you're talking about, it seems that our governmental leaders, even whether it's at nation level or international level, are often just off pursuing some other goal than the good of their people, of us, the people. There's one of the things that sounds virtuous. We have this whole Green New Deal coming out of certain members of national government in the U.S. and Europe being championed internationally. We've got ESG, environmental, social, and governance goals being brought out by not only corporations but international bodies and so on. And we have a comment here from Umhum3 who says, when the cold, hard economic reality sets in on all this ESG nonsense, economic Mother Nature is going to have her way with us. What's your thought about sort of policy-driven priorities that may not be just turning a blind eye or a deaf ear to what the real danger is that's coming right towards us on the tracks?
Well, I heard Illinois is going to go to 100% renewable. They have a mandate. I forgot. I don't know if it's 2030 or whatever. But I read an article about Minnesota. Minnesota going to by 2035 going to 100% renewable. That's solar and wind. I looked at those numbers, Dunnigan, and I transpired those to the United States, which is about 50 times. If the U.S. went totally green, it would take 2,100% of the current cobalt production. It would take 200%, 4 times, or 200% of the nickel production, and we would have to consume half of all the copper production. And unfortunately, there just isn't the metals to do that. And that's just the United States. That's just the United States. That's not China or Europe or whoever else. So the thing is, we don't have the metals to do that. And then unfortunately, we don't have the energy to do that either, because I told you, if oil gets in trouble, so does natural gas and coal. Well, you need oil, natural gas, and coal to make wind and solar power units. So when oil gets in trouble, so will natural gas and coal, and then it's going to be very difficult to make wind and solar power systems. And I think we're going to experience that in the next 5 to 6 years, even though Biden wants to see us go to totally green by 2035. It's impossible. So I think, to answer your question, people need to ignore the politicians.
Well, that's a challenge. In fact, I'll take it a step farther and say that for many people, it feels like everything we were taught about how the world is supposed to work and how nature is supposed to work and how the playing field, the idea of, America being a land where you could, achieve the American dream by working hard and applying yourself and saving up the fruits of your labors and investing prudently or saving prudently and you could have a better life for yourself and for your children and that sort of thing. It seems that people are experiencing these days that not only are the playing field stacked against them, but it seems like the rules are being constantly changed and the field rearranged and things being taken off the board or the whole board being knocked over to where you're darned if you do, you're darned if you don't. Like you're living behind enemy lines, trying to do shadow boxing with a future adversary that really is trying to make sure you don't succeed. We've interviewed Wayne Allen Root, former presidential candidate, talking about the murder of the middle class, that sort of thing. This is another example of this question from Martina Puggenpohl, who asks, is it wise to take money out of retirement funds to invest in land, food, and animal feed production? Had previously thought about real estate, but after watching landlords go homeless while tenants lived rent-free, glad I did not. I just brought that question in because it's an example of where people thought they were being prudent in the past and the rule book got thrown out and they ended up getting, undermined by a sudden policy change in a rather shifting lawless environment. As people try to position themselves for a successful future, Steve, you've talked about some principles that they should follow. You say it's pretty safe to be sure that we can't follow the lead of our leaders. So what is a trustworthy guide? What are rules that are true and that are going to be serve us well in making preparations for the future?
To answer that, let me start off by saying there's a movie called Margin Call. Maybe you've seen it. It's really interesting. I think it was about Goldman Sachs during the 2008 financial crisis when they dumped all their mortgage-backed securities. It's fictitious, but it's based on a big bank. One of the actors, Paul Bettany, is a famous scene where he's driving with one of the traders. He's the head trader, and they're driving in New York on a bridge. And the trader says to Paul Bettany, he goes, "Well, this is really going to mess up a lot of people." And Paul Bettany says, "The hell with them. If they want all these fancy cars and fancy houses that they can't afford, they need the bankers." And here's the thing. We have to understand this dynamic. While there is manipulation going on in the markets with the Federal Reserve and the governments manipulating the treasuries and all that, if the banks did not keep the scales in Americans' favor, they would be basically poor overnight. Because this energy that we enjoy, that gives us this high standard of living, if it was shared to the third world countries, most Americans would be poor overnight. But instead, the bankers push the scales in favor of certain countries and certain people in certain areas. So while we can blame the bankers on one side, we also must understand that we're living this lifestyle because Americans, we're consuming 20% of the oil. And so our debt, we can't afford this, right? We can't afford it. So what the governments are doing, the government understands this. So there's no easy fix, right? So what they do is they increase the debt. They continue to bamboozle people, because if they told Americans the truth, the U.S. economy would collapse overnight and a lot of Americans would be poor. And that's really what it comes down to. So you can't listen to the politicians because they're going to tell you information you want to hear. And so now, because the energy problem in the U.S. is so bad and our standard of living is so high, the only way to try to keep that going is you have to inflate, you have to add more liquidity, and you have to keep adding debt. And at some point in time, that's not going to work anymore. And then that's what happens. Then Americans get poor very quickly when the whole thing collapses. And unfortunately, I don't have an answer for you, but that's how I look at it, Dunnigan.
You gave us a clue a few minutes ago. You talked about not depending on so-called leaders, but instead learning how to rely on each other. Can you give us one more look at that? What a mutually interdependent communities, how that can be more robust, more sustainable, and less brittle and fragile than these just-in-time supply chain helpless suburban communities we have now.
Well, Chris Martenson talks about this quite a bit, and I don't. There's a lot of back to the land people, and it's really simple. While technology is going to be around for a while, I think it's going to get into trouble, but there's still going to be technology around for a while. I would not depend on it. You could use it, but it can't be a major dependence. So,
for example, the city of New Orleans, Louisiana, being below sea level and depending on the constant, continuous operation of electrical water pumps to keep the city from drowning, that kind of thing.
Yes, and it's when I just watched a video on Singapore. They're running out of place to put their effluent, their garbage. They're running out of water. Matter of fact, they're running out of sand in Singapore to make cement. So one engineer is figuring out how to take all their waste that they have nowhere to put, all their garbage, incinerate it at 1600 degrees Celsius, and that makes a kind of green sand, it looks like, and that's what they're going to make cement with. But you see, this is kind of the problem. We're trying to get all these high-tech solutions to fix a complex system that's so out of whack now. So I think it's best for people to move to areas that are more rural. Either they have a farmer who grows the food that they can depend on, or they can grow some of their food. The person who has wood burning, if you're in a cold climate, it's good to have wood burning, or to make sure that your house is insulated enough that if you can't get enough heat, that you can at least survive. It won't freeze you to death. And so during the winter, but it's important to be able to have a home that's probably paid for as much as possible, and to start doing things that's more independent of the system. Even though this system is going to be around for a while, but I think it's going to get more problematic as time goes on. So you have time to transition, but you can't wait for okay, I'm going to do it in 5 years or 10 years. You have to start now and slowly work to a larger percentage of independence, as much as you can.
Steve, if people want to follow your work, where should they get plugged in?
They can go to the SRS Rock Report. I put out some free articles. We have the gold and silver member subscribers. Now, today we spoke a lot about energy and the climate, but I do talk a lot about, I just did 4 gold charts that have never been seen before. And they're very interesting gold charts. It took me 2 days to put these charts together to do the research on them. So I still put out a lot of information about the gold industry, the silver industry, investment demand, about energy, because most people, they just look at gold, they just look at silver, they forget energy. And it's amazing to me, Dunnigan, if they see an energy article, they ignore it. If you're a gold and silver investor, you better make sure you understand energy. If you ignore energy from here on now, that's going to be a major problem that you have failed to understand. And that's the one thing I try to motivate people, is understand the energy, which is the reason why you should become a precious metal investor.
Do you have time to whet our appetite for, if we were to show some of those charts, that you could talk us through them and give people a glimpse of what they could get into? Or do you think that we need to give that the proper time? We need to schedule another interview and talk just about that.
Well, let's just say this. There was no coincidence that the price of gold started to take off in the 1970s. One country produced, matter of fact, for 3 decades, it was one country that increased gold production in the entire world. If it wasn't for this one gold producer, for 3 decades, gold production in the world would have been flat. And so it was the decline of this major gold producer that also impacted the gold price and changed the gold industry as we know it. It changed from being an underground mining industry to an open pit, massive open pit operations. The gold mining industry consumed 2.2 billion gallons of diesel to produce the 95 million ounces of primary gold. 2.2 billion gallons of diesel. And that's just the diesel to produce 95 million ounces of gold last year. The silver mining industry only consumed 210 million gallons of diesel to produce 210 million ounces. And I think the silver is a much better asset to own due to the coming energy problems, because global gold production is really going to decline. But I see primary silver production holding on for quite a while, because it takes so much less energy to produce silver than it does gold. And that's the reason why gold is so much more valuable. So I talk about all these different details that I don't think you can really find on the internet, and that's why we provide this information for the gold and silver users. And one last thing. This one gold country produced more gold in 40 years than the entire United States since 1835. And the United States has produced 890 million ounces of gold since 1835. And so that just goes to show you some of the dynamics in the gold market that we tend to overlook had a big impact on the gold market and will in the future.
Well, Steve, we're grateful for your presence here and glad you could make it back. Congratulations on having survived your relocation. And we'd like to just continue to check in with you periodically, because you bring a perspective and a element to our awareness about how to be prepared that is perhaps underemphasized and very important, very critical, and yet not talked about enough. So we're grateful for your presence here on behalf of all of our viewers. And folks, so that you don't miss any of the interviews with Steve or with any of our guests, including any links that they provide, any resources, make sure you go to libertyandfinance.com and sign up for our free newsletter. Just put in your name and email address and click submit, and then acknowledge and respond to the confirmation email you get, and you'll be getting every notification of every interview with all our guests, so you don't miss any of this great information here on Liberty and Finance. Steve, once again, thank you for joining us here this time on Liberty and Finance.
All right, Dunnigan, you have a great day.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.